What is up, my friends? What is up? In this video, I'm going to go over Ichimoku with you. This is basically going to be a Ichimoku 101 type course. I'm going to go over the indicator, what creates the indicator, i.e. the 5 lines that uh, compose Ichimoku as a whole system, what those lines represent, and a brief introduction in how this can be used to simplify your trading and keep you on the right side of the market without having to put a lot of time into your TA, your charting. So on the screen right now, you see the base Ichimoku indicator through TradingView. I haven't changed any settings, adjusted any colors. This is what it'll look like for you, other than your background and candles are likely different than mine. So immediately, and what everyone is most aware of, is the cloud component of Ichi. It is known as the Ichimoku cloud indicator. Now the cloud is actually 2 lines known as the Senku span A and Senku span B, or leading line A, leading line B, and they are projected forward on the chart. Now on TradingView, if you do a bar count, it's going to tell you it's 25. The Ichimoku system was originally designed using a 26 bar count for this, and this is 26 bars. The difference being TradingView does not count the current bar as 1. It's 0 or N, whereas this would be counted as 1 using Hosada's original teachings. So 25 is 26, as crazy as that sounds. This green line back here, known as the Chiku span or lagging line, is the current closing price, that same 26 periods back. And again, it's going to represent on TradingView using a 25 bar count, but that is 26 because this is number 26. So this is nothing but the closing price 26 bars back, literally. And I'll get into how that's useful in a moment. There are 2 other lines on this chart, currently red and blue. Now the blue one is the Tenkan-sen, which is a 9-period equilibrium. Okay, it is taking the 9 bars at that point and finding the 50% fib between the highest of those 9 bars and the lowest of those 9 bars. That's what that is. The red line is the Kijun-sen, also known as the baseline. I'm sorry, the Tenkan-sen also is called conversion line sometimes. So if you see that, that's the Tenkan-sen. But the Kijun, or the baseline, is a 26 period rolling equilibrium line, or a 26 period 50% fib. So all in all, what you're getting here is 4 equilibrium lines of varying time frames or counts, with 1 lagging span or Chiku line, which can be viewed as momentum. So when you start to see this lagging line break above price, which would have been here, okay, and mind you, that's occurring on this bar here. So this giant white thrust candle right here is the moment in time where momentum via this Chiku span or lagging line signaled to you that momentum was coming into the market. So when you see that lagging line or Chiku span break above price, that's your first indication that momentum is switching bullish in this instance. Just as when it broke below here, okay, again, count our 25, which is 26. So at this candle here, momentum was switching bearish via the Chiku span calculation, via the lagging lines calculation. I'm not saying that there weren't earlier indications and warning signs. I'm just giving you a brief intro into how this lagging line can be used. Now there's many ways to use it. Now I'll do this in future videos, go over some of the theories and concepts. Some people want to see it crossing Tenkan. Some people use the Kijun. Some people wait for it to cross over the cloud. Again, you'll find a way to tailor this to your own risk profiles, strategies, personality. Trading's an individual sport. Doesn't matter what other people do, what resonates with you. That's the important thing. All I'm showing you right now is the theory behind the lines themselves. Now, I touched on Senku span A and B, or leading line A and B, and told you that they are 26 bars to the front. What I didn't tell you is what they're calculating. Senku span A, or this light green line, is the EQ, or the 50% fib, of your Kijun and your Tenkan. That's all. It takes those two lines, splits the middle point on them, and it throws it forward. Senku span B, or leading line B, takes a 52 bar period, okay, and it's the equilibrium of that. So this range I just highlighted here, it is taking the 50% fib, so the highest and lowest points in that 52 bar period, and that's your 50% fib for that price range, that action. Okay, and I can actually show this a little better by, so there's our 51, and this would actually be the high, and there's your 50% point. Okay, you see it lines up with our current Senku span B. That is your 50%. So it kicks it forward, and that just gives us future support and resistance. It shows us when medium term and long term momentum is shifting from bullish to bearish and vice versa. When you see the clouds start to flip back here, it was telling you, okay, that at that 25 bar, well, 26, but it'll be 25 on TradingView again. So you would know that right here, this candle that I'm stopping on, this white candle, your cloud was beginning to tell you that things were looking bullish for the future. And if we go back, we'll see that our lagging line was also above price. So you had the Chiku span, i.e. lagging line, telling you momentum is bullish. You had your cloud starting to tell you that momentum was bullish. You had price over both your Kijun and your Tenkan, and you had your Tenkan, which is your short term. Consider it a fast moving average versus the slower moving average. Those were also in a golden cross or bullish cross. So you had all the components themselves of Ichimoku telling you that action was getting bullish. The only component you didn't have was price up and outside of the cloud, which occurred, that took place 84 days later. This is a weekly chart. So for me personally, I like to use the weekly chart as my overall trend. If I were a position trader, if I were managing my equity portfolio for, say, a retirement account, a 403b, a Roth, any type of longer term investing, the weekly Ichimoku chart is my go-to. This allows me to catch major trends. It allows me to keep from getting shaken out on positions because you don't get a lot of whipsawing in this particular time frame with this particular indicator. You can see that, you know, you started seeing bearish developments and we didn't start seeing bullish here for over a year. It started getting bullish and didn't really start getting ugly and bearish till, again, well over a year, 70 weeks or so. We've gotten choppy in here, but even on these lower term charts, um, markets are for 3 months running, 2, 3 months, even 4 months, you're catching littler trends in this overall choppy environment we've been in for a couple of years now. So what I like to do is I like to use the weekly to tell me what kind of regime we're in, what kind of overall trend the market's in. And then what I'll do is drop down into a 4-hour chart and handle some more active positioning. You can see that, for instance, on the dollar, uh, we had been in this bearish chop where we are crossing the TK lines back and forth, and these periods are going for, a week, uh, 2 days, 5 days. This one stayed bearish for maybe 2.5 weeks, and now we've started to see a significant bullish push. Okay, so this would have some alarm bells going off for you on your positioning. If we're in the weekly chart on this and we've been bearish the dollar since sometime in July, let's say, we started seeing things turn ugly. The Tenkan was rolling over. Okay, um, you were bearish. Well, this was signifying to you things are changing. So what I like to do and how I like to use Ichimoku, again, is use the weekly for my overall trend, and the 4-hour would be my management. Okay, this is where I'm actively going to take signals, TP, uh, run stop losses up and under price or over price to trail my TPs, etc. So I like the weekly into 4-hour combination. If I'm a shorter term trader, a day trader, I'm probably using the 4-hour Ichi for my trend, and I'm going to go on the 15-minute and I'm going to manage the positions more actively on this time frame. So you'll find a nice nesting for your multi-time frame analysis by using a couple of time frames to pair together. Again, for me, it would be weekly 4-hour or a 4-hour into 15-minute. If you're a scalper, if you're someone that's looking to really, really get into the minutia on price action, I'm going to do a 15-minute into a 1-minute. Okay, you're going to catch trends either way with this indicator. It is very good at doing multi-time frame analysis with one screen, and you only need a couple of time frames to handle your entire trading regimen using Ichimoku. It is literally translated, I want to say, as at a glance. It is designed so that you can pull up a chart and know within a matter of moments where you're at in the market and what type of positioning you want to be looking for. Okay, you can walk over here. Longs are strong right now and have been for weeks. This has been in a choppy bearish pattern, and we've been in a pullback since August. Okay, bearish, very bearish, and still bearish. You probably have some kind of div developing down here, so maybe it bounces up to one of these Tenkan Kijun lines or comes to test the SR, but as you can see, longs have been a sucker's bet in this particular asset since what, March of 22. Okay. Bullish. Apple's bullish. It's been bullish. You got into some sideways chop here, and once you started seeing price come back above the TK and your lagging span was breaking above price here, that was telling you that long was strong back in March of 23, and since that signal, uh, it's up 41% in a year and a half. Not bad returns if you just set and forget. Bullish, been bullish for a minute. Chop, you can see that price is oscillating back and forth around the cloud. You're getting these flat periods, okay? When you see a lot of flat on the lines in Ichi, that's chop. That's sideways action. That's no new highs or lows are being broken of any meaningful time frame for a while. When you see flat, that's what that's telling you. And flat parts in Ichimoku are going to be where you're going to see strong support and or resistance. This chart screams I have been running like a raped ape since, I mean, obviously, if you're going to cherry pick the low, it was the COVID low. But once you started seeing price breaking out and above the cloud and momentum is above price, I mean, it's up. That's been a long game. That's where you're looking for longs and reasons to stay long and entries on the long. On the 4 hour, you catch them pullbacks and watch for it to shift into a bullish transition. Get your entry, ride it up. Take your entry on the 4 hour, ride it up on the weekly. It would have kept you out of chop and you'd be 218% in the last, what, 4 years? It's not a bad return, 218%. Chop. You see everything's going sideways. The cloud hasn't been going anywhere but sideways. Chop. This one's been a little bit more bullish and we're entering into chop now. Okay. This one's been kind of grinding sideways and maybe some kind of a bear flag. It's going up, but you can see a lot of flat periods and there's not much angulation. Angulation in Ichimoku is another indicator of strong momentum or weak momentum. When you see like this, the lines are angled. Senku span B is angled up. Senku span A is angled up. Kijun angled up. Tenkan angled up. This is screaming at you that there is bullish momentum in the market right now. We're breaking highs. We're on to new highs. Looks like all-time highs. So it, it looks like a jumbled mess. When you don't understand what's happening on the chart, it's intimidating, it is overwhelming, it is busy, it's meme worthy. It's the sure it's about to bounce off of one of the million lines you have on your screen. That's really not what this is. If you take the time to get into it, learn what the lines are telling you, and understand the nuance that Ichimoku represents, this chart can be an amazing, amazing thing for your overall trading. You can get into the charts, see where you're at, what you want to be doing or not doing, and you can do it all within a matter of 10, 20, 30 seconds per chart. You see if there's anything that you want to be looking for. Okay? Bearish and it's pulling back. This chart's telling you that you probably want to be hunting a short on the 4 hour. The trend is your friend until the end, and right now it hasn't had an end. Maybe there's some giant bull div here. I don't know. This isn't something that I particularly trade, but it's guilty until proven innocent on this. This thing has been rolling down for whatever, a year and a half plus. So until that changes, there's nothing to see. Chop, sideways chop. So you can follow some kind of range trading, okay? Pick your Bali bands, or I don't need to leave Ichimoku personally. I've tailored it and understand what it's telling me enough that I don't need any other system on there, but you can trust divergences at extremes on oscillators a lot more. When you see this sideways chop action, Look for your bull div. Look for your bear div. Look for your bull div. Look for your bear div. Look for your bull div until it starts breaking out and cloud starts making new highs. You're in sideways chop. Treat it as such. Strong bull, angulation out the wazoo. There's a big difference when it's doing this and doing this, and the Ichi screams it to you. Look, these clouds barely left this range for 3 years plus. Okay, the cloud was just flat through here. Senku span B would step up sideways, step up long sideways, micro step up sideways, down sideways, down sideways, 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 sideways. Big difference. Up, over, up, over, up, over, up, over, up, over, up, over. See the difference? So all of this is a very powerful tool for at a glance type TA analysis. Um, yeah, that's redundant, right? TA analysis. You'll have to forgive me. Only had my first cup of coffee so far this morning. But yeah, I just wanted to go over Ichimoku, make a little introductory video, just telling you how it can simplify your trading, what the lines are telling you, and introduce you to the multi-time frame analysis aspect of it. If you're looking at a weekly chart, it's really months, if not years. If you're on a 4-hour chart, it's you know days into weeks, and sometimes even months worth of positions. If you're a day trader, the 15-minute is your weapon of choice because 15 minutes going to keep you in trend that has been going for over a week now. So 15-minute tells you what side you want to be on, and you drop down into that 1 or 3 or 5 minute to hunt your super sniper ICT entries, whatever the case may be. But yeah, I want to thank you guys for your time. As always, good luck, have fun, practice your solid risk management. My goodness, my tongue is just fumbling this morning. And thank you for your 22 and a half minutes.